talk about future trends in base oil markets. And the program for today is as follows. First, I will obviously start with a very short introduction of baseoilmarket.com. That's the company I represent. After that, I will go into the current economic environment. You have already heard quite a lot about that this morning from HSBC, so I will try to keep that short and just hit some highlights. Then we will go to the main part of the presentation, which is global trends driven by emerging markets. And after that, we will discuss the impacts of these global trends on base oil markets. And finally, we will come to the conclusions. And this is basically the most important slide, I think, of the whole presentation, the demographics. It's basically the demographics of emerging economies that drive the whole cases for emerging economies, and also the reason why growth will, in our view, continue for the next decades to be very high in emerging economies. We just look at some numbers. You see the numbers for emerging economies in blue, and for developed economies in, well, something that you can maybe call green. Looking at the population, about, I should look at the numbers here, 83% of the world population lives in emerging economies. But that really shows the potential, economic potential, and also the demand for commodities for emerging economies. Land mass, 75%. Foreign exchange reserves is about 68%. Foreign exchange reserves you should translate as kind of a buffer that you have if the economy turns bad, if you have a recession, then these foreign exchange reserves allow you to, as a government, to invest in your own economy and to try to raise the economic growth. As you have seen in 2008 in China, they can do it easily. They have a lot of money that goes for a lot of emerging economies. They have also done it in the US and in Europe and in Japan. And that, as we also heard this morning from HSBC, there's no more room there. If we get a new recession in Europe or in the US, there's simply no more room to stimulate the economy. Emerging economies can do that, so that's a really big plus. You have some other numbers which all point to the same direction. Emerging economies are demographically in a very positive position. Maybe one interesting thing on the bottom line, if you look at the market capitalization of the equity market, so the size of the equity markets, emerging economies are only 13% of the global equity markets. So that may be interesting for the investors among you to know. But there's also quite a lot of potential there. So that is the potential that you have. Now, what will that bring looking into the future? This is a study done by Goldman Sachs. And that's their view of how large the different economies in the world will be in 2050. So that's a long-term picture. But the important thing is here to note that the emerging economies in the world will definitely grow in importance. China here will definitely be the biggest economy by size in 2050, almost twice as big as the US. But you see the other emerging economies are also growing a lot. You have India, African countries, Brazil, Russia, Mexico, Nigeria, Philippines, they're all mentioned here, Pakistan, Bangladesh. These are all high growth countries, so they will grow in importance because the US and Europe are simply, and Japan also, they're not growing or growing very slowly. So the importance of economies, emerging economies we'll see is commodity prices will keep on rising, crude oil prices will definitely keep on trending up. You will see an increased demand for lubricants, fuel oil, etc. So the base oil market will also there will be more and more demand in the base oil markets. Well, that has been mentioned extensively by my colleagues over there. There will be a shift in demand from the Group 1 to Group 2 and 3 products. And another thing that is very important is there will be increased government control on base oils. It goes for a lot of commodities, but also for base oils, which means increased political price risk. If you look at the charts, on the left-hand side, that shows the lubricant demand in orange 2009, 2010 in yellow, and 2015 expected in red. And that's all domestic China information. So you see that the lubricant demand in China is set to rise further. That's no surprise. Base oil consumption in China is also set to rise further. No surprise. supply domestically in China will also increase, but it will not increase faster than the excess demand.